Hey everyone, how you doing today? As promised, we are starting our expert series, and we always start Monday hot with Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good start, good finish.
There you go, buddy. Hey, so first and foremost, I always appreciate the fact that you make time for this channel. You're obviously on the road doing lots and lots of things. So first off, thank you for pulling over, having a quick conversation with me and our audience. Much appreciated.
Yep, absolutely, man. I just keep doing what I do, and that's the mobile office of the future, right?
There you go. There you go. Well, hey, one of the things I want to talk about, because again, you're my expert in the series Monday through Friday. That's a developer, a builder, a visionary, frankly, right? You see dirt and you have the ability to envision what an end product looks like. I want to go back to
Hmm.
a conversation I think we had last week. It might have been the week before, that I think is going to be market moving and investable if you understand how to play that. And that is builders, Lennar, Pulte, and the like, plus all the ones that aren't public, might actually become, I don't know, feeders for Wall Street hedge funds, pension funds, by developing neighborhoods as build for rent. I think this is a topic we are going to hear a lot more about in the next couple of years. What do you think?
Oh yeah, absolutely. I think it's getting more and more popular. It makes more and more sense. I think it's a good thing. I know a lot of people may agree or disagree with that, but I think quality single family for rent homes are just as valuable and needed as primary residences for people that want to own their homes.
Yeah, I think what's happening now is I think every crisis has a chance to change behavior. Of the crisis that I've invested through in the last 30 years, this is the first that I think has been long enough to change behavior. And I think
Hmm.
one of the behavior changes is more and more people are going to say space is good. So when in doubt, they're going to say, I would rather have a house, right? They want the
Yeah.
backyard, the garage, whatever.
Well, and you've got, the bulk of the buyers right now, the biggest portion of the market of home buyers, it's millennials.
Mhm.
So, they're having kids, they need the yard, exactly what you said, in suburban America. If they're not living in cities and, they don't want to live in an apartment or townhouse or something like that, they want the single family with a yard, that kind of thing. So that's what's driving a lot of the demand right now. It's record low interest rates. So in most markets, if you're paying 20 or 30% more for a house, it actually works out better in the long run than paying less and having a higher interest rate over a 30-year amortization schedule, which is really mind-boggling. But when you do the math,
Yeah, do the math.
it's yeah, it's all about the payments. And I don't think most of the millennials are worried necessarily if their houses drop 30 or 40%. It's a really interesting mindset versus like you and me. We think about value, we think about equity, whereas millennials, they're thinking about payment, and they're thinking about, I want a yard to raise my kid, I don't care what the price is or value is.
Yeah, and I think we're at an interesting point, right? Have you traveled to Europe much? I know it's kind of a tangent. Have you been in Europe a bunch?
A little bit, not a ton.
Yeah, so I did a lot of work in Europe. Again, when I was running sales teams and you had worldwide responsibilities, I remember several countries. I want to say Switzerland or Finland. I could be wrong. My memory's fuzzy, 10 or 15 years ago. But there were several countries in Europe where home ownership, right? What you and I know as a stick-built home,
Yeah.
is predominantly owned by insurance companies, right? It was something like 70% of homes were rented, right? And
Hmm.
I remember thinking about that, going, that can't be right, because we're used to the other way, right? 68% homeowners, 32% renters. But there are many, many, many countries in Europe where it's the other way. And I think we might be on a path, right? If we have new construction, we have inflation in materials and lumber and all of that. The prices rise. That pulls existing homes up. Just it's how it works. It
Hmm.
could get to a point, then you have interest rates rise in a year or so. It could get to a point where our affordability crashes and the right option becomes rent, right? There's a lot of parts in the country today, even after price increases, where it makes more sense to buy than rent. That equation could very quickly flip in most of the country, where renting is a better option than owning. We could be heading that direction.
Well, yeah, financially, and we've done the math where if you put, 20% down, you factor taxes, insurance, maintenance, all of that stuff at the end of the day, um, you know, a home that generally appreciates, 10% a year, it's not a great investment. You're actually going to lose money, but it's a forced savings account,
Yeah.
for a lot of people. And I use my mom as an example. She watches this show, by the way, loves it. And,
Oh,
yeah. So, anyways, she sold her house just recently and, walked away with, $250,000 after 20 something years.
wow.
So it sounds like a great profit, in terms of what she bought it for 250, sold it for 500. Of course, the market is unique right now.
Mm,
Under normal circumstances, she probably would have sold in the fours, low fours, but it sold in the low fives because of what's going on right now in the area she's in. So at the end of the day, when you factor in what she put down, all
mm,
the money they spent maintaining it, all the money they spent on taxes, insurance, all that other stuff, and you spread that 250,000 that she made over that 20 some year period, it ain't a
yeah.
lot of money, when
Yeah.
you could have taken that same amount, put it into an index fund that
Mm,
probably would be worth a lot more now, arguably. I haven't done the spreadsheet on it, but
yeah. I still think for most people, I think was where you were going, the forced savings. I think the property, I
hmm
want more people on the property ladder, right? I think being a renter nation where it's 70% rentals and 30% owners, I'm just going to say it. I think that's bad, right? That's not an environment that I hope we ever get to. I just want to get that on record. So I think getting on the property ladder is important, but it could get really unaffordable because I'm just envisioning builders, right? They're already not building enough, right? We already have undersupply and all of those things of new houses. If they chunk out 20% or 30% or whatever number it is of their capacity because they only have so much lumber, so many skilled resources, it's just a math problem. And if they just start saying, hey, we're going to take a third of our company and you go build for Wall Street, and oh, by the way, we'll still do individual sales with the other 67%, man, prices are going to go up.
yeah, I mean it's compressed right now. And the interesting thing you said, you don't know, well, you don't think a renter, housing
Mhm.
stock is better than owning. And I would ask why.
Yeah.
Why is why is renting a bad thing versus owning? So why is that,
Yeah.
number one?
Yeah.
And
So let's
number two,
talk
you got to
about
think
that.
about where we are.
Yeah.
Okay,
So
yeah.
let's talk
Why do
about
you
that.
think it's bad versus, you know what I mean?
Yeah, so it's certainly I'm biased with my personal opinion, a lot like your mom's situation. My mom was in the same situation. Uh, she bought a house in Sunnyvale, California. She always gets mad at me because I always get the number wrong because she watches this show too. I'm gonna call it
Yeah.
25 grand for, it's somewhere around there. And so that was in 78 or 79. She sold it for $1 million flat.
hmm
In 19 no in 2000, I don't know, 4 3 something like that, before this run up. And again, she can now live comfortably the rest of her life, thankfully. No chance in hell she does that if that doesn't happen, right? So the forced savings is going to help my mom, or is helping my mom, is going to help your mom. And I just see that and go, I wish more people had that, right? Get in your home,
hmm
make it your forever home, live there, paid off. And when the time's right, when kids are out, you've left your work, you've retired, you want to go live somewhere else. My mom chose to live in the hills of California, and thankfully she's got enough to enjoy the rest of her life happily and without owning a
Yeah.
home. If she was a renter, no chance. She would be, oh man, she'd be hurting right now. So that's why I just think that forced savings account every month is a good thing.
Yeah. Yeah. And that's true. I mean, and that's the whole philosophy. You have to live somewhere,
Mhm.
and whether you're renting or owning. So at the end of the day, if you've made your payments over 20 years, 30 years, whatever it is, you end up owning that asset free and clear, at the end of that period, then yeah, that's great. That's what it basically equates to. So the real question is, for some people that may be better. For others,
Mm,
it may be better to use the money to invest
sure.
versus spending it on your primary residence. And then what's the outcome of that if you, index fund, things
Mm,
like that, look at that investment over the long period. But, most people don't have that type of discipline. They don't have, the ability to be able to do that because you're taking away from income where, if you're making a house payment, you're making a house payment, and
Yeah, for me, it's just appreciating the consumer, right? I've been studying the consumer since I was getting my econ degree in college, which was over 3 decades ago. And the consumer and consumer psychology is very repeatable and predictable. For example,
hmm
you take two individuals, our moms, and let's just say one bought a house and the other rented. You go forward, They get to some point. One was index funds, one was a house. But in reality, what's going to happen is life's going to happen, right?
Yeah.
Their kids go to college. Their kids do this. Somebody gets sick. It is so much easier for somebody to look at their trading account and go, hey, I need to help Susie or Mark or, whoever, and I'm going to pull off some money, right? They just, it's almost too liquid, right? A
Yeah.
house is not that liquid. Yes, you can go get a second or an equity line if you had to, and my
Yeah.
parents did, but it's harder, right? You don't sell it, and you don't sell it at the wrong time, right? Again, think about individuals and consumers, right? Stock market runs up crazy high and then crashes 40%. And then your 401k becomes a 201k or whatever the jokes come. The consumer psychology, when it's cash or close to cash, they often make bad decisions at the wrong time, right? It's emotional. And
Yeah.
emotional.
And all of this, yeah, exactly. And then all of this that we're talking about is all relative to good times. Your mom sold at a good time with unbelievable appreciation that you'll probably never see again. So did my mom. My mom's mom, same thing. They bought their house for, I don't know, $6,000 or $10,000, lived in it for 50 years or however long it was until she, moved in with my mom, but they sold that house and that sustained her and her medical care the rest of her life because they owned it. But what about 2008 and 9? What if you had to sell in 2009 and many people did, you lost all your equity?
Oh, for sure.
So it's only good when housing is good, and housing doesn't always and forever go up.
Oh, no question.
Oftentimes it goes down and it comes back. So this whole idea that we're talking about, equity can be wiped out. Now, no values in most areas went to zero. Some areas they did, but obviously that's not a widespread thing. So at some point, the house should still be worth something at the end of the day if it's well maintained and all that. But a lot of cases, people's equity got wiped out in 08, 09, and it took until really, what is this, 2021? It was really 2019 before values got back anywhere near where they were before that 09 happened.
Yeah.
And now we're in a very artificially inflated environment, and the demand on construction. So construction makes sense when it's cheaper to build than it is to buy.
Yep.
Now we're getting to a point, and they're only building now because of generally there was still plenty of resales when construction was booming. It was just cheaper to build. Now it's more expensive to build or right at the same as it is to buy, but there's no inventory. So it makes a lot of sense to build. Eventually this is gonna, level out. Construction costs will come back down.
Yeah.
Housing costs will come back to earth. Supply chain, supply will increase and these things will change. So this is a short-lived kind of thing that we're going through right now. So, 20 years from now, 30 years from now, and even right now, does it work the same way with what you're paying for a house?
Yeah, no, that's all good. But again, when I think about back to the sort of topic on this one is new construction becoming a model for builders. I think it's just for whatever reason, it just feels like a perfect marriage, right? We got a bunch of builders that would love to streamline the build process, less variables. They would love to know the end buyer wants to buy all of them versus one. And then we got Wall Street over here hungry for an asset with yield. And right now apartments don't, and this don't, and that don't. I don't know if I want to say nervous, maybe overthinking it, that we could see 25 to 30% of new housing construction sort of come off the market, right? Not that it's not going to be built. It will be built, but it won't be built for the intention of home ownership. It'll be built for some stream of income on Wall Street. Could it ever get that big, you think?
Yeah, potentially. If you look at, the percentage of homes that were bought during the financial crisis and what percentage of the housing stock did that represent? I don't really know. Was it 5%, 10%? But, it's getting more and more popular. More and more developers are doing major communities with thousands of homes that are for rent only. So it is something that's becoming more popular. And it does make sense, but is it enough to really make a dent in the housing stock of the country? I don't think so. I mean, there's a lot of houses out there.
Yeah, no, I don't think the impact on existing homes or the housing stock, I think, is to inflate the price even more. But because I do see late this year, maybe into next year, where more and more builders test the model and they're like, damn, that works. Because again, the few that I've read about, and I've been actively searching this for a couple of weeks now, they're profit margins are 50% higher because they can streamline costs. They remove variables. It's faster, right? They don't have all these
Yeah.
change orders. And oh, by the way, they're getting bidding wars for the end product. So it makes perfect sense.
Yeah,
So
it makes a lot of sense. I think, as that appetite increases, more builders will be incentivized. It is an
yeah.
easier business model, to transition to, especially if the profit margins are there, because a lot of these companies you're talking about are public companies, and when the shareholders see, what's happening, where the profit is, they'll shift their business model real quick
Hmm.
and stick to it. The biggest challenge they have is land.
Yes.
That's your biggest challenge in the whole equation of all of this. There's huge demand right now. There's a very unique environment right now. So it takes a year to 2 years to 5 years to build out anything that's significant. A
Mhm.
year to 2 years to get it approved, then 3 to 5 years to get it actually vertical, built, leased up, ready for an institutional investor to buy that thing
Yeah,
for anything large. So where are we going to be in 3 to 5 years?
that's a good point.
Who knows?
That's
And
good.
are these institutions going to have the money available to them that they have now? They got so
Well,
much money right now, they're
yeah.
just throwing it at anything.
Yeah, so I think the institution has the money, but to your point, right? 3 years is an eternity in Wall Street, and there
Yeah.
could absolutely be three, four, five, six other assets with better cap rates in 3 years. Is there a better one today? Not according to my research, but 3 years from now, I mean, they could all be buying distressed hotels and office buildings and converting malls. Who knows? Because Wall Street doesn't care. Wall Street doesn't care about single family homes or apartments or any of this. They're just chasing the maximum return. So again, consumer
Yeah.
behavior is predictable. So
Well, and the key is they buy finished products, so they're not
yes.
developers.
Oh
So
yes.
so that is going to be your limiting factor. How quickly can
Mhm.
these things be brought online? How much land is available to develop or redevelop? And there's still plenty of land out there. The question is, how sustainable is the model in the long run? How big of an appetite is there? Because everything reaches its diminishing return, right? Everything reaches its limit. So, I mean, what is the real absorption rate of rental units if every house in the country all of a sudden became a rental unit? Well, I guess you wouldn't have any choice, but you'd have to rent. But the question is, what is the appetite for owning versus renting? So there's
Mhm.
only so much that people are going to want to do, because, like you said, owning a house is still great for a lot of people.
Mhm.
That's not going to change,
Yeah.
and the
Agreed.
government's not going to step in and change that. The government is wanting to incentivize more and more home ownership because of what you said, for savings. The
Mhm.
government realizes we get people that own their homes, we don't have to take care of them.
Exactly. Yeah. Good job. Shout out both our moms for doing the right things. Congratulations, moms.
Yeah, yours hit a major home run, man. That's awesome.
Yeah, she got lucky, but that's okay. She spends the money just fine.
Yeah. Now my mom, that was a culmination of them rolling forward into houses over their entire life. So
Ah,
yeah, this came at a 20 year. Her last house was 20 years, but it's after 60 years of owning homes, buying one, selling, taking that money, rolling it into
ah.
the next, rolling it into the next. That's what they did
Yeah,
their
we
whole lives.
once my parents owned, we rented for a little bit. I was young, I don't remember it all. But yeah, they once they bought, they fought tooth and nail to keep it through some very tough times. And yeah, it paid off. So this has been a fun conversation. I look forward to the next one. Thanks.
Yep.